Hi, my name's Ben from Great Britain Estates, and today we're talking about property investment clubs and the issues that surrounded that. So I'm with my good friend Nat Ciccone. Nat, back in the day there were certainly issues with buying off-plan property through property clubs. Can you kind of explain the surroundings and what the actual issues were there?
Yeah, for sure. So certainly with regards to property clubs, particularly when the market was going very, very well, sort of late 90s, early 2000s, and there seemed to sort of be this an inordinate amount of growth that was ongoing. The property clubs were inviting people in to show them how to become a property investor, so offering education, and in fact what they were doing was selling the property at the very, very height, as much as they possibly could, certainly more than perhaps it might have been valued at that moment in time. The issue,
that they were overvaluing the property that they were passing on to the
owners. For sure. So in essence, they were getting a discount from the developer, but then the price that they were selling to the club at was at a higher level and often over the actual market value at that moment in time. People felt there was an ongoing amount of growth that wouldn't slow down. So with that sort of level of confidence in the marketplace, people were willing to buy into it. I suppose the issue particularly was the amount of leveraging that was involved as well. So very often you'd be looking sort of 95%, sometimes 100% loan to value. And obviously in those scenarios, if you get a change in the marketplace, the rates go up. And that sort of level of borrowing becomes unsustainable against a value that is very high in the market.
So how has that affected people's perception of planned property?
Yeah, for sure. I mean, obviously, a lot of these clubs were actually buying off-plan, and that's how they were getting a discount from the developer, and then ultimately overselling it to their clubs. So in that sense, they were using what was a very good structure to do something that was effectively, became stigmatised because of the issues that were surrounding the over-leveraging and obviously the overpricing of those properties to the clubs.
So what lessons can an investor learn from that?
Well, that's a very good question. I mean, in essence, really, any investor that's looking to buy off-plan, really what we're wanting to make sure, certainly with our client base, is that the leveraging is a sensible level that would ensure that if you're holding that property to let in the long term, you're not going to run into problems when the market changes, because you will see ups and downs in the market. If you're holding for long term, 20 years as a buy to let opportunity, you want to make sure that you can weather those little storms that will come along inevitably with the changes to rates and in mortgaging.